So if you had a chance to buy an asset which currently has really high demand, which has low liquidity and has a really inelastic supply, would you? So that's how I currently see Bitcoin. So in this video I want to dive a little bit more into some of the numbers, some of the demand and supply dynamics, and hopefully from that you'll see a little bit of the reason as to why it's playing a bit of a cornerstone in my portfolio at the moment. So hello, my name is Chaz and I go by the name of the Risk On Investor here on YouTube. So this channel is documenting my journey to building a £1 million investment portfolio. Now, everything on this channel is not financial advice, it's purely documenting my journey. It's showing my progression through that journey. It's giving you some of my thoughts and insights onto what I'm thinking about at the moment. So if any of that sounds interesting to you, hit the subscribe button down below and let me know in the comments that you're enjoying the video. So Bitcoin is currently a bit of the darling of Wall Street. If you look on most days at the top 10 ETFs by net inflows, you'll quite often see a Bitcoin ETF in that top 10. Now, as a bit of a refresher, you may not be aware, but back in January, the US, which is the largest capital market in the world, allowed the trading of spot Bitcoin ETFs. Now, there had already been futures products that existed, but a spot product means that the underlying asset needs to be held as part of that investment trust. Now, one of the reasons why I'm quite surprised to see Bitcoin trading in the top 10 ETFs on most days is because of the asset class size. So Bitcoin itself is a $1.4 trillion asset. Now that sounds really big, but when you compare that against some of the ETFs that it's rubbing shoulders with at the moment, you're looking at S&P 500 trackers, NASDAQ 100 trackers, global stock market index trackers. These products are tracking asset classes in the hundreds of trillions, not just in the 1 to 2 trillion range. And so when I see something like this, I need to sit up and take notice. And that's what I've been doing, and it's been working out quite well for me so far. But I think there's still a lot more to come, and I want to brush over some of the high-level concepts and things I'm thinking about in this video. Now, since the ETFs have launched back in early January, there's been about $11.8 billion in net inflows into spot Bitcoin ETFs. That's coincided with about a 60% rise in the price of Bitcoin, as well as an increase in market capitalization of Bitcoin by around $450 billion US. Now, if we stripped out everything else and just looked at the spot Bitcoin ETFs against the Bitcoin price and market capitalization, now ignore that it's a gross oversimplification, that's around a 38 times multiple for the net inflows to the price impact on the market capitalization. Now, the fact that that number's so high tells me that there might be a bit of a liquidity issue going on. So let me demonstrate this by a bit of an example, because I think that most people don't really understand that prices are set on the margins of assets, especially when the asset can be split into multiple shares or units. So imagine there's a company A, and you really want to invest in it. Now imagine company A has 10 shares outstanding and each share is worth £10. So theoretically, company A is worth 10 shares times £10, £100 in market capitalization. Now, you go out looking for someone to buy some shares from. So first, let's say you come to me. Now, let's say I happen to own 9 out of the 10 outstanding shares. Now, if you come to me and you start haggling with me and say, I want to offer you £10 a share or £11 a share, because maybe £10 a share was the last publicly traded information for that share price, which is where we're setting this market capitalization benchmark at. Now, I could just turn around to you and say, no, never selling any of them. Go and find out who owns the last share and see if you can buy theirs. So that would immediately mean that 90% of the supply of these shares are illiquid. Now fast forward and imagine you find out who owns the other share, and you catch up with them and you're going to go through the same process haggling with them. But now imagine instead of you trying to buy a share from me, there's someone else as well. So you're actively bidding against other people for this one remaining share that you might be able to buy. Now let's say that you agree on a price of £20 with this other investor who owns the last share. He agrees to sell for that price and you get yourself a share for £20. Now that means for just £20, you've moved the entire market capitalization of that company by £100, or 5 times the actual money that you put in. And so from this example, we can see that actually when there's very low liquidity in an asset, those fringe prices that set the price for all shares can actually result in massive paper changes in wealth. I think that's what could happen with Bitcoin, so let me explain. So at the current moment in time of recording this video, Bitcoin is trading at around $74,000 US. Now if we look at the spot Bitcoin ETFs, we can look at the average net inflows per day, and we can see that it's around 275-ish million US dollars a day. So at that Bitcoin price and that amount of demand, the spot ETFs would be sucking up around about 18,600 Bitcoin per week. Now that's difficult to put into context until you hear about the supply of Bitcoin. So without going into the details, new Bitcoin is minted approximately every 10 minutes. And at current rates, that's around 900 Bitcoin per day, or around 6,300 Bitcoin per week. So you can see there we've got a rough supply-demand imbalance of about 3 to 1. And that's excluding any other market forces, so retail customers, other over-the-counter trades that might be being made that we aren't aware of. Now I do just want to touch on over-the-counter trades, also known as OTC desks. So an over-the-counter trade is like a private trade. So for example, say I wanted to buy a really large amount of Bitcoin, I might go to someone that I know owns a lot of Bitcoin, maybe a Bitcoin miner or something for example, and agree a deal direct with them. So that way my buy doesn't impact the wider market, it's agreed in private behind closed doors. Now, by its nature, because it's private and behind closed doors, it's quite tricky to know how much liquidity there is in OTC desks. Now there's a company called Glassnode which specialise in crypto analytics, and pretty much they're estimating that OTC desks are almost empty by this point. So that means that any new net demand will need to be purchased from public markets. And as we saw in our company example earlier, once things are on public markets, they have the ability to move price. Now if that 3 to 1 supply-demand ratio didn't look good already, it's about to get a whole lot worse. In about a month's time, Bitcoin will go through what's known as the Bitcoin halving. So every 210,000 blocks, a block lasts about 10 minutes in Bitcoin, so that means about every 4 years, the issuance of new Bitcoin halves. So every 10 minutes, we currently have around 6.25 Bitcoin mined, which is where that 900 a day, 6,300 a week comes from. And soon that will go down to 450 Bitcoin per day, or 3.125 Bitcoin every 10 minutes. So if all else remained equal, that would mean our supply-demand dynamic would go from a 3 to 1 imbalance to a 6 to 1 imbalance. So just to illustrate that, I've made a very quick chart here, which just assumes if Bitcoin price stayed constant, if the inflows in ETFs remained constant, and if the background exchange reserves, which are currently going down anyway, remained going down at a constant pace, you'd see that there'd basically be no liquidity in Bitcoin left in about 18 months. Now obviously this is a really crude model and isn't particularly realistic of what's going to happen, but it just shows you how illiquid Bitcoin could potentially get, and the fact that it could get there very quickly. Now just to throw out a few more general thoughts into that already cocktail mix of potential supply-demand imbalance, if there was to be a 1-to-1 supply-demand for, again, ignoring the rest of the market, just spot Bitcoin ETF products, assuming demand stays constant, and the new issuance of Bitcoin after the halving, to have that 1-to-1 ratio, the price of Bitcoin would need to be around $430,000 per coin, which is obviously a massive price increase from where we are now. Now, I personally think to achieve that kind of value, we'd have to have quite a specific set of circumstances, and I'm planning on getting out way before we even got anywhere near those numbers. But you may realise that a lot of those numbers rely on the current demand staying constant. And there's just a couple of data points I want to point you towards, which suggests that actually there's a good chance we could see sustained demand for quite a long while yet. Now, the first is these spot Bitcoin ETF products. The demand, in my opinion, is likely coming from institutions and large buyers who haven't been able to access Bitcoin products easily so far. So currently the only way that you could really get exposure was to actually buy the actual asset itself, in which case you have to custody it and there's lots of other things that you need to sort out if you're an investor. Or you have to buy a futures product, which means you have the counterparty risk of not having any claim on the underlying asset. So I think most of the initial demand we've seen is just some pent-up demand from larger institutions or larger players, or maybe some retail who just wants an alternative way to buy Bitcoin. And eventually that will start to peter out. But what is due to come in the next few months is we should start to see these Bitcoin ETF products come into more traditional wirehouses. So things like your Bank of America or your Wells Fargo might start offering these to clients. And once that becomes a case, that unlocks trillions of potential extra capital that's currently invested in more traditional markets that might want to allocate a small percentage to crypto. So that means we probably could see another 6 months or so of really strong inflows into these Bitcoin spot ETF products. Another demand case comes from retail, and whilst it's a much smaller amount, I think people underestimate how quickly it can come and go. So I track fairly regularly the Coinbase exchange because it's one of the larger exchange and they're quite transparent about their data. And over the last few weeks, the amount of trading volume on Coinbase has surged to coincide with the spot Bitcoin ETFs and the recent price increases. But not only has it surged, but it's surged in quite interesting places. So a meme coin known as Shiba Inu has actually become the second most traded asset on Coinbase in the last few weeks, overtaking Ether, which is the second largest cryptocurrency by market capitalization. So that shows me we're going to see a lot of frothiness in the markets, especially as this meme coin doesn't really have any intrinsic value in my opinion, and yet it's had a $15 billion market cap increase in the last few weeks. We're also seeing on search data trends that there's been a slight uptick in terms of the number of people looking up crypto-related terms. Again, we're still nowhere near the sort of 2021 euphoria highs that we saw a few years back, and whether we'll reach that again is maybe a little bit unknown, because I think a lot of people probably got burnt a few years back by the kind of mania and then sudden collapse we saw at the end of 2021 into 2022. Now, if you're part of my newsletter, you probably see that I use Dogecoin as my proxy for tracking meme coins, and that again has added another sort of just shy of 15 billion. And so if that's something you want to sort of keep track on, keep tabs on, you're welcome to sign up to my newsletter. It's completely free. I share a lot of content that's not just crypto related. So for example, last Friday I talked about how the UK probably missed out on £170 billion worth of free cash grab that it could have got, which was particularly important given it was the UK Chancellor's budget last week. So if that kind of content, both sort of traditional and digital assets, interests you, then again, you're welcome to join the community on the newsletter. The links are in the description below. So where does that leave Bitcoin? What are my takeaways from that? Well, from that, I can see that there's still a lot of demand to come, especially once these wirehouses get going. I think we could see, again, in the tens of billions inflow in the next 6 months. And again, if that has a big price multiple, like we looked at earlier, potentially being in the 30s at the moment, that could add another $500 billion to Bitcoin's market cap fairly easily. We also have the inelastic supply of Bitcoin with this constant issuance, and that issuance is going to get halved, which is going to again reduce the new supply coming out, which is another potential price tailwind for Bitcoin. But it's not just Bitcoin that will benefit from this. There'll be more further out on the risk curve, the kind of smaller cryptocurrencies like we've seen with the meme tokens, especially where I've highlighted Dogecoin and Shiba Inu, that could see significant price appreciation. Now, unfortunately, you can't hold any of those in a taxable account here in the UK. So if you've been following my channel, you know that I've gone heavily into a company called MicroStrategy as a proxy for this play. Now, I've never actually released a video going into full depth about why I've chosen MicroStrategy, and maybe I'll do that if you're interested. If you are, I'd love to see some comments in the description below. And it would be a much deeper dive video than this type of video, which is quite a high level skim the surface. I'd go a lot more into the deep dive in the numbers and show you some of my spreadsheets behind my thinking. But if you're not so interested in that, you can always check out how I'm doing with my investment playlist up there, which shows month to month how my investments are doing. Depending on when you watch this, if it's a long time in the future after I posted this, I might have even sold out of the positions by then, and you might see the results as to whether that play worked out for me or not. But in the meantime, thanks for watching, and I'll see you in the next video.